Hello guys, this is Martin from Sickets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week and then use technical analysis to understand it better and analyze it better and learn something from it and plan for a better trading week for the next upcoming week. It's starting from May 29 tomorrow 2023. So if you're not subscribed, please subscribe and share it to your friends and colleagues. And let's get into the charts. Here we go. This is the weekly charts that you see here. What a candle, bullish, wide range bullish candle is what you see in the Nifty. Good comeback. Banknifty has got a bounce up that has happened and ended up with a kind of interesting small body. Looks like a pin bar, hammer, doji, whatever. There is indecisiveness, but it's a big size indicating the support from the downside. So bullish moves on both indices. And also it's at a very crucial zone, a breakout zone, with Banknifty inches away from the all-time high. Daily charts are showing bullish candle. Friday's move is wide range bullish candle again in the Nifty and the Banknifty also wide range bullish. It's a beautiful bounce that is showing with the pin bar seen on the previous swing low. Banknifty also beautiful movement move that is actually a bounce up from the change in variety of the previous support zone. Previous resistance zone acting as support zones now, and that beautiful bounce has happened in both indices. That's what daily is, super bullish and weekly bullish, extreme bullish on Banknifty, and Nifty on extreme bullish on Nifty, and Banknifty shows some amount of indecisiveness. That's another look of this, right? We had this kind of a flag formation that's happening, which indicates the size. Height of the flag could be the move that could be expected to sending upside 19,500 kind of zones. Banknifty also, it's a flag pattern that you can clearly see. A breakout has happened. The breakout zone is clearly indicated by the blue mark here, and now it's a rounding pattern resistance zone at the Banknifty, very crucial. And breakout from here has to happen, making a new all-time high. Nifty is far away from the breakout zone, but it's a rounding pattern resistance zone that can be clearly seen from the cup pattern or rounding pattern, whatever you call it. This zone where the market is now is very crucial, very crucial breakout zone where resistance could come in or anything would happen. That's a weekly view of that. All the bands are clearly showing it's a consolidation that is centered in the market. In the daily chart showing expansion on the upside. And if you also expansion on the upside is seen, bias is bullish because it's much above the median of 20 moving average or median of the bands, right? So Bollinger Bands clear indicating up move. That's what it is all about. So just to put in numbers, it's nearly 300 points, 294 points, 1.64% of up move has happened on the Nifty. Wide range bullish candle. Now it's greater than 10% of rally has happened from the previous swing low. And it's a 2% pullback that happened early week, and now it has come back and above the trend line, above the breakout zones. Banknifty is flat, 25 points only up, but and this is hammer or weekly candle is seen there. It was slightly cautious on that, but remember it's sort of inches away from an all-time high, hardly 100 points away, where it touched briefly previous week, but it has not overcome that yet, right? So it's 9 to 13% of up move that is happening from the previous swing lows. I can clearly see. Daily charts also 178. That's nearly 1% up more than Nifty, and it's closed in just below the 18,500 zone. And Banknifty also closed above the 44,000, and it's 336 points of up move that has happened on Friday. Right. So, white bullish candles as we have already seen on both indices on the daily time frame. So it's a rounding pattern breakout zone, narrowing wedges there. So you cannot rule out the possibility of a breakout from this zone. It's a very crucial breakout zone. Anything could happen. Resistance could be there. Profit booking could be there. Sell-off could be there. So you got to be cautious on that. So CIP bound is what happened exactly last week. After a minor retracement, the CIP change in variety bounds from the previous resistance zone is what exactly has happened. And remember, we are at a crucial zone of rounding happening. There is a possibility of consolidation at this zone. If resistance could come in play, or it could, it could be it's all with the resistance and it's going to break out. So holding 18K and 44K is going to be sustaining that would be very crucial. Close above that another week, and then that would mean we are in for a big rally after that if that happens. Right? So fingers crossed there. Now in Japan's we have already seen that it's bullish indication. Right? So Let's move ahead and see the support resistance zone. So the first resistance would come in at the rounding numbers at 18,500 as to be cleared, and this is a close above that on the weekly basis would be what bulls would be looking for. 18,600 would be again rounding number, and then 18,700 would be the resistance first. After that is the previous week high, and after that the all-time high is 1887. Downside suppose would be seen at 18,473, where there is some kind of resistance, which is also a neckline of the rounding pattern. So that could act as a support downside, and then 18,300, 18,200, 18. These are all zones where the 20 moving average also is coming to play. So supports downside, previous lows, and then after that you have 1860, which is good action support zone, and after that 17,950 zones, and then 200 EMA would come in play at 17,5, 17,9, right? So that's where the support resistance. Remember, there is a divergence that you will see in the next sections on that. That's why I'm talking about the momentum divergence that you see there on the RSI. Let's move on with the support resistance on the Banknifty. You can see that the first all-time high 44,150 would be the first resistance upside. After that, it could be 44,500. Could rally anywhere to that because it's all-time high levels. But 44,500 would be resistance because it could be a rounding numbers. It's a can come from. Downside supports going to come in at 44,000 definitely. Then after that, 43,460 could have come in as 20 DMA support, and then after that 43,367, 43,000 would be a rounding number support and previous low, and then 42,700, 42,600, 42,000 rounding number is the post-budget day high. So these are the supports for the downside. Resistance we already seen. Here also you can see a momentum divergence clearly there, which is bearish in nature. So resistance support zones are can be clearly seen from this, and make a note of this. Go back to rewind and go back and make a note of this. Let's correlate that with the open interest data, and then you could know where exactly the market could be rising, or to enter and vortex. It could be clear from that and price levels. Looking at the momentum and the trend, you can clearly see that it's bullish momentum everywhere, and trend is also bullish. But to be precise, Nifty has climbed back in the daily time frames in the bullish zones. So bullishness is all around. On the Nifty with respect to the momentum, and also in Banknifty also it's bullishness and rising momentum is what you see, no doubt about that. So trend indicator ADX is showing that that's bullishness that is there everywhere on the daily time frames and the weekly time frames as well, on the Nifty as well as the Banknifty, but there is weakness in the trend strength on the daily chart. So the falling trend strength is what you see. The strength of that, it's definitely bullish, but the strength of that is still falling. It's not rising up. That is something to be cautious about. It is there in the Banknifty as well. Even the weekly also, the time frames, the bullish ones is there as per the ADX, but it's not having enough of the strength except for the Nifty, where it is seen rising on the medium-term time frames. So we are cautious about the trend, and momentum is clearly bullish. Looking at the volatility, you can see that the VIX has cooled off, in line with the market moves last week that happened. It's 3% down, but now it's 11.9, and it's in lower regime below the 12. So it in fact went to the 11 kind of level. So any falls below 11 could give sharp spikes like it happened earlier, 15% spike that happened earlier. So you have to be cautious about that. So VIX back to the lower volatility regime, which has cooled off, which is good for the bulls. Now open interest data on the options is on the futures futures is showing that it's a short covering that has happened on both indices, which means big breakout moves could obviously happen. So clearly bullish there. People could cover the shorts and then go for the longs. Two big breakouts, big moves can be expected in the next pocket. Next week is what open interest data is futures open interest data is showing. For the June 1st weekly those expiry, open interest data is showing that the put call ratio is 1.31, which is bullish, 1.2 on the Banknifty, which is also bullish. So futures and options, both open interest data is extremely bullish. Look at the levels for the price. You can see that 18,300 is for the highest put trend you see, and 18,400 is for the next highest put trend you see on the Nifty, and 19,000 and 18,700. Suddenly we are talking about 19,000. You can imagine the bullishness out there, right? So clear, bullish moves. As indicated, that supports, solid supports, and huge put writing is seen there for the indices, the Nifty especially. Banknifty 44,000 is crucial. That's where the strangles are there. Put and call writing highest is seen at 44,000, 43,500 and 44,500. 1,000 point range of the second highest put and call writing is seen. And the futures high built up, and the put call ratios for the next expiry in June 1st is also indicating that this bullishness. So overall, open interest data is clearly bullish, with Banknifty going to be a crucial player, just like the charts are indicating. Open interest data is showing that 44,000 and breaking out of that and staying there could be very crucial for the next weeks overall. Right. Look at how the industrial sectors watched. Despite how it has been showing in the last several weeks, the industrial sectors, across this sector, wide range bullish candle is what you're seeing. Every single sector, IT sector, wide range bullish candle, metal wide range bullish candle, auto sector wide range bullish, pharma wide range bullish, FMCG wide range bullish. There's a mistake here. This is bullish. So every single sector is bullish, right? Realty, FMCG, pharma, auto, metal, all of them bullish. 3.7% up move on IT sector. IT has come back, big time, but weekly still has to climb in the bullish downside. Metal is 5.7% up. Auto is 2% up. Pharma is 4% up. FMCG is 3% up. Realty is 2.7% up. So across, that's why now Nifty has moved up. All the sectors, big breakout move has happened last week. It's the first time that all bullish, wide range bullish candles are seen across the sector after a very long time. But some of them has to catch up in the side, catch up from the sideways on the bullish zones on the medium time frames, especially the metal, pharma, has yet to climb into the bullish zones, and IT also has yet to climb into the bullish zones. Other than that, auto, FMCG, reality is clearly bullish, and then you could take long trades also on that. You consider the fact that it's bullish on both time frames. This is what you see here. IT clearly IT has made a comeback now to the bullish zones on its shorter time frame, and weekly also is rising up inside this. Metal has given a good bounce up candle from the support of RSI 60-40, and auto is also breaking out from the rectangular consolidation. Bullish momentum clearly rising up on the medium time and long and daily time frames. Pharma has given biggest wide range move from it's a bounce from the support zones moving average of the RSI. It's a beautiful up move, and it is still not above the bullish zones, but on the medium term, on the short term, it is already in the bullish zones. So FMCG was breaking out, and then it's in the top of parallel channel here, because there's some pullbacks could be expected, but momentum is rising up and bullish trend is rising up. Realty also has broken up from parallel channel from support zone, good swing up move. Momentum has climbed to the bullish zones on both time frames and rising up. So across industry sector, beautiful up move. And now analyzing the industrial heavyweight stocks that contribute maximum to the index, you can see that HDFC Bank is troublemaker. It's falling. It's a stock that is falling with respect to the momentum, and there is a flag and pole that's still valid, but the breakout is in the bear zones, and it's still not able to make all-time highs. HDFC Twins creating troubles, but with falling momentum, and Reliance is having rising momentum, still not in the bullish zones, but beautiful solid bullish candle you can see. So Reliance has been consolidating in the medium term charts. You can clearly see that, but it's heading towards bullish is what you can see. So IT stocks, Infi and the TCS both have come back. Big moves on the sideways. Both are on the sideways now. There's a gap resistance for the Infi, and that's crucial. So that gap resistance is somewhere around the 1,400 nearby zone, so it's crucial. You can see the dotted line. So at least it has climbed into the bullish, climbed into the sideways zones of the medium terms, and climbed into the bullish zones of the short term terms. So that's a good move from the info. So IT sectors made a big comeback. Look at ICICI Bank. It's a crucial. There's a dodgy candle there. Momentum is bullish, trend is bullish, everything is bullish. The price is well within the ascending wedge, ready for a breakout, but to be crucial, there isn't a red candle. Will it have the steam to move further, or will it retrace to take a support at the RSI 60 and then bounce it from here? We'll have to see. Also, there is some kind of dodgy in this, that you can see the banks on the Kodak Bank also the momentum is bullish. You have to be cautious because it has been consolidating if you see at a longer time frames. Right. So just to put it in a nutshell, the banks are not doing that great, although it's except the XZG Twins, other two sizes, Bank and Kodak Bank are doing okay, but the final weekly candles are in this. We have to be cautious there. So the thing is, none of the heavyweights are in bullish zones except the ICICI Bank and the Kodak Bank. These are only the two stocks, and both of them have got indecisive weekly candles formed. So I have to be extremely cautious with this bank. So the banks will be the key decision makers next week. That's what you can see from the index heavyweight stocks. But IT has come back, that is for sure. You can see that in the charts. and how the institutions participated. That is with the big news here. That, the Fyers continue to be big buyers in the buying mode since almost a month now, or more than that, multiple weeks. Previous 3 weeks, so this is the third or fourth weeks that the Fyers are buying in 3,230 crores of buying in the cash market. We can see, interestingly, D has stopped the profit booking, and they have also started buying 3,480 crores of buying has happened. Net retreat is also from the institution side has moved up. So overall, the institution support is there. That's why the market is moving over, and there is every chance of breaking out if this sustains. Another look at the global markets and the global currencies and the commodity markets, and we analyze that. Begin with the dollar index. We can see that its dollar has strengthened 1% down, breaking out of cup and handle pattern, and then climbing up in the momentum in the sideways 104, 102. But in contrast, although there is no correlation between direct constant correlation is not there between the price movements of the dollar and the dollar index and the USD/INR. The USD/INR had hit almost very close to the all-time high of ascending wedge, and then hit the resistance and then went down 0.35%, 82.55. Still, it's very close to the all-time high. So momentum is weakened a little bit slightly. From the bullishness, it has fallen back in the sideways zone, but rupee still remain to be weak. No call off. So that's which is a worry for an economy like ours. Crude oil is 1.5% up, 72.87. It's okay as long as it maintains that level. It's in the bottom part of the channel, is unable to climb over the 85 levels last attempt also, which is good. It's okay. Momentum is in the sideways after having gone to the bearish and climbed there. It's sustaining that momentum. Remains in the bearish trend, at least in the weekly terms. Now, gold also has hit resistance and fallen down after a failed attempt. Another third or fourth times of in the last 2 years of failed attempt to break out of the all-time high of 2075. Once again, it is dipped with momentum in the sideways. Now it's that's the hedging instruments. The market is rising up, so we'll probably shifting some money from the gold back to the equity. When the market is moving up, that's what's happening. So that's it. The commodities are okay. Currencies, currency, dollar is appreciating, but our currency is not weak. It's not strengthening, although the rupee is appreciated a little bit last week. Right, that's a summary. And the next thing would be look at the Dow Jones. There is a contrast signal that the Dow Jones and other indices, S&P 500 and Nasdaq, is giving. Actually, Dow Jones is showing red, and the S&P 500 and Nasdaq is breaking out. That's what you can see. This is a descending wedge. This is what you see. Bottom here is the S&P 500 is also showing green. It seems to be breaking out of that wedge, and Nasdaq clearly indicating that it's a breakout. That's why IT stocks are also rising. But look at Dow Jones. It's failing the resistance, and although it's a hammer, it's taking the support, and then although it's not indicating that it's going to fall down, the VIX size is indicating that it's support from the downside. It's unable to take out of this zones even when the other two indices are breaking out. So that is going to be very crucial. So can the other indices single-handedly break out? It may not happen, right? So either the Dow Jones will follow the other slowly, or the others would fail to would be a fake out. Right? I know Nasdaq is having big breakout. Bullish, I can clearly see wide range bullish and both. So momentum otherwise, in summary, you can see that it's sideways and rising up, not at bullish confirmed unless the Dow Jones also moves up. So that's what using indices. A mixed pack of 1% down on the Dow Jones, it's 0.6% and 3.9%. Big contrast between the Dow Jones and Nasdaq, right? Breakout is happening in Nasdaq, and breakdown resistance heat is felt by the Dow Jones. That's what it is, right? But both of them are at the top of it. Descending wedge resistance heat is seen. So that's what the global mother market, US market indices are showing us, right? So big moves is coming from the US market. We have to be cautious, right? Either side. So given the fact that we will expect that the Dow Jones also catches up while our market is also breaking out. That's what the bulls will hope for. Let's see, right? So that's a wrap up, and then let's get into some action for next week. Two stock picks: IDFC First Bank. It's a green close above a rounding pattern, cup pattern, and then clearly a good breakout move to the all-time highs. 15% at least could come in. As it's a long call, momentum is bullish, trend is bullish, price action is cup pattern is bullish in nature. So that's it. A good swing trade opportunity could be there. Stop loss also get out of once the pattern is negated. Syngene International is a biochemical biotech industry showing a consolidation and a breakout. If the price moves further up, take the trade, and then you can go for short swing trades. It can go at least to at the height of this consolidation. It can move on, but maybe it's long. But you can take book your profits and trade. The volumes are also good. IDFC also, the volume is not shown here, but it looks good. Momentum is breaking out clearly. All the bull zones are rising up, and then trend is also having bullish strength. That's the case with both the stocks. Right? Weekly and the daily time frames are bullish. And trend, momentum, price action, all are bullish. Volumes also supporting. Right. So IDFC first bank long, Syngene long. Another actionable for next week is usual double diagonal calendar spread is giving a very wide range and a very good probability of profit. Although the risk reward may be slightly disappointing, but you'll have to take the profit 1 or 2% every week. Basically, it's selling call on the put of the next week, and the far week for the week after that, for the 8th June, we'll be selling put and the call at the hedge positions. So volatility spikes up from this low volatility of 12. Even then, we'll have the advantage of the beta. Right, it gives a very good range. So as long as price is not falling below the 18,200 and price is not breaking out of the 18,740 zones, it should be safe and we will be making money. To come out of that before the expiry date is the key. Right, consistent profit every week but small. And that's what this strategy is. Double diagonal calendar spread on Nifty options weekly strategy for the next week is here. Right, so that's actionable. Let's just wrap up. The more the indices, Nifty and the Banknifty has bounced back from a short consolidation or pullback that has happened previous week, and then it's now a breakout zone. It's a breakout zone in the sense that it's a rounding pattern and crucial breakout zone. Remember that we had a 10 to 13.5% rally already, and it's very crucial that the breakout happens, or will it consolidate? Would it take some time before it breaks out further to have a bullish rally, or would it reverse? All these things are questions that is billion-dollar questions that we can't answer. But what the charts are saying that there is high probability of further move. Not really charts, the data are also showing that the momentum is bullish, trend is bullish, open interest is bullish, put call ratio is bullish, Bollinger Bands are bullish, Fyers or DAs both are in the buying mode last week. Right? And all the sector are having wide rich weekly bullish candles, and that's happening after a long time, as I said before. Low volatility, VIX regime, VIX is low, fear is less. US market is showing green, especially the Nasdaq is breaking out, although Dow Jones is having slight trouble. All are in favor of the bulls, and Banknifty is inches away from all-time high. So while bullish is what my market view is. A small row indecisive candle on the Banknifty is a worry. Narrow ascending edge in both indices. Daily charts could be a concern, and resistances are a neckline of the cup and rounding pattern. Factors in favor of the bears. Now the global crucial and fears, inflation rate, high cold war, all these things are still there. Uncertainty is still there, and this rebalancing also coming on May 31st. So I have to be cautious. There could be volatility. There could, if market is unable to sustain, or the US market is crashing down, some recession fears or interest rate, all that unexpected blacks and kind of news comes in, then all this get negated. And the fact is, rupee is not strengthening, and it's taking out the gains of the crude oil in a low level, right? So that's also another factor to the uncertainty, adding up to the uncertainty, right? So otherwise, overall, market view remains mild bullish. Next week, the view is 18,200 to 18,700 is what is expected on Nifty, 43,500 or 44,500 is what is expected on the Bank. For the medium term, 16,650 swing lows and 36,800 swing lows is what is expected on the indices. On the upside, 18,500 and 44,000 if it sustains another week, then could be big mega breakout rally that could be happening, taking to 19,000 above and 45,000 kind of levels for sure. If that happens, if it does not sustain, either in the consolidate for a long period of time before it gets enough strength to break out, or it could be reversing and take another swing low on the medium term chart. So gotta wait for what the market gives us. But as of now, mild bullish is the market view, right? So as I always say, protect your capital is the key thing. Risk management is the key thing. Your view can be wrong and can be right. It doesn't matter. But matters is how you position size, how you cut short, how you raise up, how you hedge your strategies with especially when you're playing with options and derivative instruments, right? So don't take overnight risk without hedges, and play safe with non-directional strategies, vertical spreads. That's what we'll have to do. Right, so that's my view, mild bullish view. Yes, I hope this has helped you in some way to have a better trade plan for the next week. If that's helped you in some way, please like it and comment your feedback, and then share it to your friends and subscribe if you're not subscribed. I really appreciate your help in this as well. Thanks for watching. If you want to avail the Telegram service, click on the link in the description. Thank you. Bye bye. Have safe trading, Happy trading, happy learning, happy investing. Bye-bye.